Dear friends, greetings to all. Today's topic is procedure in the preparation of double entry system. As you know that double entry system, each transaction is divided into two aspects. One is known as debit aspect and another one is known as credit aspect. Which would be considered as debit aspect and which one to be considered as credit aspect is based on the principles of accounting. That accounts, whether it is real account, personal account or nominal account. Now let us see the procedure. First one is the recording in journal. Second one is posting it into ledger. Third one is preparation of trial balance. Fourth one is preparation of final accounts. Very easy. Fourth only. You know that journal. Second one is ledger. Another one is trial balance. 3 statements. Then finally, final accounts. So easy to memorize. Okay. First, let us see about recording in journal. Journal is considered to be as the book of secondary entry. Okay. Secondary entry. And all the transactions should be recorded in the journal. Suppose in a day there are 1200 transactions, then 1200 debits, 1200 credits. But as far as the accounts are concerned, the accounts may be only say 150. 1200 transactions, but the accounts may be 150 only because many cash transactions may take place. For example, a sales in a shop, that is goods sold, Horlicks sold, cash account data to Horlicks, again and again. That in Horlicks account means Horlicks one product is sold, sales account we are considering. Whatever it may be, sales and cash account, 2 accounts only for all the sales. Maybe sales took place for say out of 1200, 600 transactions are sales. And that means only one account only. Whereas 600 sales, one account sales only. Whereas for cash means for purchase also the cash book is used. So that first in the journal based on the principles of accounting, journal to be written. That means sales means cash account debtor to sales account. Purchase means purchase account debtor to cash account. Then payment to X account debtor to cash account. Then receipt from Y, cash account debtor to Y's account. Rent paid, rent account debtor to cash account. Like that, all the journals to be recorded. Then in one day, sometimes 1000 transactions may be there. Thereby you just count for 30 days, 30,000 transactions. And for 10 months, 3 lakh transaction. And for 12 months, 3,60,000 transactions. 3,60,000 transactions may be recorded in the journal book. Now through the computer system, in computer also it may be recorded. Software also it may be recorded. This is the journal, recording in the journal. First, what we are doing means recording in journal. It is going volume of size. Then second one is the posting into ledger. Ledger is the book of prime entry. It is called primary book. And in ledger, various kinds of accounts are there. Maybe 3,60,000 journal entries. For 3,60,000 journal entries, maybe 250 accounts may be only there. But cash account may be going in a length because it contains all the receipts and payments. Sales account only sales done. That is also lot of transactions might have been posted. purchases maybe once in, I say 5 times in a month, means 60 transactions only. So posting means we can just prepare the sales account. Then that means sales account shows credit balance. So buy credit side, buy cash, buy cash, buy cash, buy cash. Any credit means buy A, buy B, buy C. Like that it is going. Okay. Then you take the purchase. Then what happened means purchase account data to cash account. Then all purchase account should be debited. So to cash account. Account showing debit balance will be debit only. Like that, the all postings to be done. Capital account showing credit balance by cash. Loan account also credit balance by cash. Like that, the ledger account should be prepared. It contains two sides. One left hand side is debit side, right hand side is credit side. It contains, each side contains 3 columns, one date, particulars, amount. Like that 6 column total. 3 columns for left hand side, 3 columns for the right hand side. Okay, next one is the preparation of trial balance. Trial balance is knowing the trial, whether the journal and ledgers are properly written. So this trial balance contains 3 columns. One is particular column and 2 amount column. One is debit, another one is credit. And all the account balances, account should be totaled, balance should be taken and recorded in the trial balance. Suppose 250 accounts, ledger accounts are there, then 250 accounts should be written one by one in the trial balance. And if sales, definitely showing credit balance on the credit column, capital account on the credit column, assets account, land and building, debit column, then purchases, debit column, salary paid, debit column, income means commission received, credit column. Like that it would be written. Finally, total should be calculated. It should be equal. Debit side should be equal to credit side. If it is equal, then we can claim that accounts have been written very correctly. Okay. Then fourth one is preparation of final accounts. Final accounts means trading and profit and loss account, revenue account, 2 sections. Another section is balance sheet. All the revenue items should be posted into the trading profit and loss account. In the trading account, balance is showing gross profit or gross loss. If excess of credit means showing gross profit, excess of debit means showing gross loss. Then gross profit means taken on the credit side by gross profit in the profit and loss account. In all income, revenue income, other income which has not been, direct expenses, direct income is taken in trading account. Whereas in the indirect expenses, indirect income are taken in the profit and loss account. It shows a profit, net profit, ultimate or net loss. If excess of credit means net profit, that is true net profit. Excess of debit means it shows loss, that is by net loss. That by that way it would be closed. Then another statement is balance sheet. All the capital items which have not been taken in the trading profit and loss account to be taken to the balance sheet from the trial balance. All assets should be recorded on the asset side, that is right hand side. And left hand side is meant for liabilities. All the liabilities that the account showing credit balances should be recorded, that is capital item should be recorded on the debit side. So it contains 2 sections, sides. One is left hand side meant for that liabilities and amount. Right hand side assets and rupees amount. Okay. Finally, this debit side, the liabilities total will equal with the asset total. Then only we claim that the double entry system is properly executed and that correct in recording and posting. Okay. Thank you. This is the procedure of accounting, that is procedure of double entry system. Thank you. If you are not so far, subscribe the channel mwn.com. Please subscribe by pressing the subscribe button in the video. Okay. Thank you very much.